Hi, this is Matt McAleer, Director of Equity Strategies at Cumberland Advisors. Let me give you a quick 60-second update of where we are on our strategies, and then I'm going to spend 60 seconds talking about some thoughts and ideas. In our U.S. strategy, still at that 3% cash level, we've had some sectors act pretty well from those buys, particularly healthcare, some of the equal-weighted index areas, and we've had some real weakness. You don't have to look far to realize a 5% position in energy right now is hurting. International, we're still up at that 20% range cash-wise. We did do a small buying in emerging markets this week. If we're going to look for a positive there, it's that it's trading north of October's lows. Tactical trend, that is a flexible strategy where we've been sitting at 20, 21, 22% cash and remain there. Need to see the market do a little bit more before we commit anything to the equity side. Fixed income got a little wind at its back this week with the 10-year trading down below 305, giving a nice bid to our bonds and our balanced accounts and in our fixed income accounts. I wanted to touch quickly with this grind we're going through on the equity side. We have a few things we always talk about in the trading room. I even have taped up on my screens. One is embrace the grind. The market is never going to always be easy. We catch a year like 17 when you couldn't do much wrong, very little volatility, and things were easy. 18, different story. We've already had a 10% pullback in early spring, and now we're in the midst of one right now. What we try to do is look at what can go right and what can go wrong, and we factor that into our decisions. Be very careful. We get emailed notes from other analysts, other strategists, people in the market. Be very careful of anybody who appears to have a market all figured out. We know if somebody is too sure of their opinion, they're going to get carried out in a box. Many of them are back on their second and third return from being carried out in a box. We look at what can go right, what can go wrong, and we realize we may get whipsawed in some of these decisions. You can't be afraid to get whipsawed on a trade. If you make a trade, it's not working out how you think it is, there's no shame selling, moving to the side. If you've had an opinion, for example, the markets are going to go down and the market starts running, don't be afraid to put money to work here. Opinions and thoughts in the market have to be changed and be flexible. Peter Brandt, a trader I've followed for years, Commodities Corp trader over 40 years, tremendous trader, likes to say he has strong opinions loosely held. That's another little quote I have up on my trading screen. Strong opinions loosely held. Flexibility. A wrestling coach back in college, Gary Taylor, one of the top 5 all-time winningest coaches in Division I wrestling history, said something to me early in my career. I wrestled for Gary for 4 years. He said, after a particularly tough loss, he said, don't build a wall around it. Don't build a wall around a loss, whether it's in an athletic event or if it's in trading. You make a bad trade, you go on to the next trade. The next trade is always the trade that can get you going again. So we're scuffling here, we're grinding, markets are tough, but we'll keep our head down, keep moving forward. I hope everyone had a great Thanksgiving. For a trader, it was about the only good day of the week this week. We'll see what happens next week. We'll find out a lot more. We have some different levels we're watching. Unfortunately, it seems like everyone's watching those same levels, and the market will never do what everybody wants. So that 2605 area in the S&P that everyone keeps talking about probably has to get taken out. The 2580, 2585 from April that the whole world's talking about, we'll see. The market will do whatever it can to make you either change your mind or bring doubt into your decisions. So the key is staying flexible. We'll see you next week.